As we reported, this has been a big week for the stock market. Not only did the Dow Jones close above the 40,000 mark for the first time today, the much broader S&P 500 and the Nasdaq also reached record highs this week. The markets have rallied back from the recent lows of 2022, and the Dow is about 40% higher than when the pandemic started. Robin Farzad joins us now. He's the host of Public Radio's Full Disclosure podcast. It's always great to see you, Robin. So how significant is it that the Dow hit the 40,000 mark? Because the Dow doesn't tell us as much about the economy as the S&P 500 does.
It's a great talking point. Everything is kind of feeling pricey right now, whether it's housing, crypto, gold, stocks. Then again, at the turn of the century, there was an infamous book called Dow 36,000. And it took forever for the Dow to even visit 20,000, 25,000, much less 40,000. There's another school of thought that says the Dow should be far higher if it was more rationally planned. For example, if Apple or Amazon was added, or if there were other components right now that more represent this economy than the old economy components that are still in it. So, but we'll take it. I mean, but nothing is really cheap in this really peculiar economy.
So what's behind the broader rise in markets right now?
Artificial intelligence. We have a semiconductor company called NVIDIA, which is suddenly a $2 trillion player. A lot of enthusiasm about the AI boom. How is it going to affect manufacturing, construction, journalism, media, all these powerful semiconductor chips that are going to be required, the staffing, the consulting, professional services that are going to be disrupted because of that. So it's almost a parallel internet. We've had companies with record profits because they have pricing power. And oddly enough, I mean, that passes through to stock market investors. Time was you'd worry that inflation would kill stocks. But if you're actually buying a Chipotle, if you're buying a home builder, you have these portfolio companies that are pushing through price increases, and you as a shareholder are partaking in that, hence Dow 40,000 and the S&P at an all-time high.
So if you take this into account and you add last month's cooler than expected jobs report, is this an overall indication that the Fed might finally take this step of cutting interest rates?
It's bizarre that we're having that conversation. You have asset prices at a record high. Nobody can seem to afford a house. They're bidding, competitions left and right, and yet the Fed is romancing this idea of cutting interest rates. I think it speaks to the weakness in the economy, the fact that those who are not partaking in this wealth effect, lower middle income people, lower income people who have to overmax credit card debt, who are struggling to make ends meet amid this inflation, the kind of the value meal shock at a drive-thru at a McDonald's. The Fed has a blunt instrument. We talked about this before. And if they ease into this, does the housing market really need stimulus right now? Does the stock market need stimulus? There's a roaring debate going on in Wall Street. And indeed, the Fed was supposed to hike earlier, and it's been punting on it.
So what I hear you say is that this is not enough to improve Americans' overall perception of the economy.
Well, what am I going to do? Take my paper stock market winnings, my 401k is feeling puff. I still get sticker shock. I go into a Chipotle. An extra dollop of chicken is $4, Jeff. Come on. Guacamole, $4. It's not like, I have
That's
that
real money. Yeah.
That money is on a login thing, but it's not like it's giving me a dividend to deal with the real world sticker shock of gas, housing, rent, clothing, you name it. I mean, auto insurance, it's a bizarre economy. But when hasn't the economy been bizarre,
So how do you see this playing out moving forward?
I don't know how we put the genie back in the bottle. As I've said before, it's the first time in a generation that we've dealt with capital I inflation. And the Powell Fed was telling us a few years ago that this was transitory. I mean, it's going to pass. But you get this once-in-a-generation pandemic, you flood the plane with money, and it's really hard to pull all of that back and to normalize in it. What's a normal interest rate? What's a normal stock market? What's a normal housing market? I think that's a $15–20 trillion question right now.
Robin Farzad, always enjoy speaking with you. Thanks so much for coming in.
Thank you.